Hi, I'm Lawrence. I was always told to get a degree and a job at a good company, but just 3 years into my safe job, I was retrenched and left broke. That idea no longer works. Instead of one job, we need to be focusing on multiple streams of income. As a full-time property investor and coach, my goal is to educate you and other South Africans to reach financial freedom through property. Let's get started.
One of the things that I talk a lot about is never buying into a new build investment. I think a lot of investors in South Africa get seduced into buying a new build because of the way that these development companies market these properties. But from a purely financial perspective, if we're looking at cash flow, a new build is almost the worst investment that you can have. If you're looking for capital appreciation, there is an argument that potentially buying into a new build early on will get you some equity gains. But if we're looking purely from a cash flow monthly rental perspective, it doesn't make sense. Now, to prove my point, I decided to use a live example. So this is an email that I received, hottest buy-to-let deal in Centurion. And here's a whole lot of marketing speak. But basically the key thing here is the numbers. So they're saying that their 2 beds, 1 baths are going to sell for 695, and they're giving us a monthly surplus of 284. So rent minus levies, minus rates and taxes, minus bond repayments, we're walking away with a positive cash flow of 284, which seems on the surface somewhat realistic or somewhat possible. The reality is it's not the case. So what I've done is I've opened up the My Property app and I've run the numbers on the app. So I've put in the asking price, the rental amount, I've put in the transfer costs, I've put in the finance costs of 100% at 6.5. I've worked out the cash flow to get to the same number as them. So I've done their exact calculation, and I've gotten to 258 as the monthly cash flow. Let's look at the return on investment. So the return on investment is currently 7.12%, which is not terrible if you think about the fact that a new build might have some capital appreciation. Now, this is the key thing to look at. Monthly levies, subsidy for 12 months. So what they're saying is we're not going to charge you the 900 Rand levies for the first 12 months. That's the only way that they get to a positive cash flow situation. So let's go back to the app. What I'm going to do now is I'm going to rerun the numbers, but I'm going to make it more realistic. Okay, so nothing changes here. The buying costs stay the same. Finance costs, so they're working on a 6.5 to 7% interest rate, which yes, is possible today. But you know, as the economy recovers, we're going to move back towards a 10% or 9% prime. So I'm actually going to use 9% because I believe that if the deal doesn't work at 9%, it's not a deal worth doing. Even though the interest rates are low now, they're going to go back up. So that actually increases our bond repayments. Then when we go to the cash flow tab, let's include the 900 Rand. Because yes, year 1, we don't have to pay the levies. But what about year 2, year 3? All of the time, we're going to have to be paying levies. Then you've got these other provisions that they never took into account. So your void provision or your vacancy provision. The property is not going to stand full all year round. There's going to be vacancies. Now, because it's a new build and it's in a good area, you probably have a low vacancy charge. So I would work on a 4%. Management fee. You want somebody to manage the property so that you can buy back your time. So let's say that they're going to charge 8%. And then maintenance, you probably won't have a maintenance provision. Because it's a new build, you probably will have zero maintenance in the beginning. So, looking at this, your actual cash flow is minus 2,500 Rand, which means you're losing 69% return on investment. So that is the reason why I don't buy into new builds. The only reason I would buy into new builds is if I'm trying to take advantage of the 13 Sex Act, which allows you to get some tax rebates. I'm not exactly sure how that all works. Please speak to an attorney about that. But there are some great tax benefits if you buy 5 new builds. The other reason I might buy a new build is if I want to reduce my cash flow. So if I've got a couple of positive cash flowing assets, I might buy this one to reduce my cash flow by 2,500 and thus reduce my taxable payment. And the third reason is maybe because I want to participate in capital appreciation. So if there's anything you take from this video, it's that new builds are not a money-making scheme. The money is being made by the developer. You're not making the money, at least from a cash flow perspective. On a month-to-month basis, no matter how they try and market it and how they try and convince you that you're going to be making a positive cash flow, trust me, you're not going to make a monthly return. The only way that you're going to make money off new builds is if you take advantage of that 13 Sex Act, which is the tax rebate, or if you participate in capital gains, which again is speculation at best. So I hope that this helps. Please don't buy into a new build unless you're doing it for the tax benefits or because you believe in the capital appreciation. From a rental perspective, it's not going to make financial sense.
Are you tired of having more month at the end of your money? It's time to venture into property investing. And although it may seem scary, don't worry. We've created tons of resources to help you get started. From tools that help you analyze deals to online training courses to one-on-one specialized coaching. Click the link in the comments below and get started today.